Oh no! This is a terrifying chart we are looking at. It looks like the roller coaster ride of real estate is beginning to fall. This is terrifying news. Maybe, maybe not. What I want to do today is explain this chart and why I think we've peaked as a real estate market and what that means for you as a homeowner, a home buyer, or a home seller. Hey there, my name is John Glutch. I am the team leader of the Glutch Group. We sell hundreds of homes a year in both San Diego and Phoenix. And this right here is the Cromford Market Index. This is a measure of how hot the market is at any given time. And you can see here the green line, that represents the index. And a 100 on the Cromford Market Index is a normal market. That means supply and demand is in balance. We have about a 6-month supply of homes in that kind of market where if we stopped listing new homes, but people kept buying at the normal rate, we'd run out in 6 months. Right now, the inventory is 2 weeks in both San Diego and Phoenix. That's insanity. That's multiple offers. That's people tripping over themselves to buy homes. That's craziness. That's what we have right now. So you can see here back in November, we were at 360. It's been crazy for a while. You know that. And up. It went all the way above 500. And then it started to kind of fall. Now we're up. We're about 520. Now we're down into like the 480 territory. So what's going on? What does that mean to us? How come Johnny homebuyer out there in the streets does not feel like the market has gotten softer? That's because this is a leading indicator. This is way out front telling us what's going to happen in the market. This level of change is imperceptible to people who are out there doing, writing offers, that kind of thing. It's still super, super hot. But what this is telling us is what's going to happen in the future in terms of appreciation and what's going to happen with the market. So let me show you the next chart and show you where we are headed. Shrink myself down there a little bit. Okay, so you can see way back 2001 we've got here, and the black line represents the Cromford Market Index. You can see it hovers around 100, normal, right? And that's this kind of baseline here. And then when it gets above 100, it gets up high. Then we start to see lots of appreciation. That's that blue line. But you can see the Cromford Index outpaces or leads the appreciation. So when the market turns, like we're seeing now, let me move this over a little bit. Here in 2021, the market's turning just like it turned here, although we got way higher, right? So appreciation is crazy, like 18% last year in San Diego and Phoenix both. It's going to go higher this year. Like the market is even hotter than it's ever been. We're probably going to see 20+% appreciation in both markets this year, but it's starting to really cool off. And that's good, right? That means buyers are kind of sick of fighting. Maybe they can't afford the homes anymore, so they're backing out of the market. We took a call from a seller last week who wants to sell 20 houses. They want to cash in, investors, right, who did really well timing wise. That's good. That's what's normalizing this market, and that's a good sign. That's healthy. We would be scared if it just kept going up and up and up. That would be terrifying. That's like bubble territory, but we're starting to see some normalization. So here's what that means to you. I just bought a rental property in Phoenix, for example. My wife and I did. Well, why would we buy at the top, right? Like literally the market's starting to curve down. Well, look, if you bought a house right here in 2005-ish, you can see you've still had a whole lot of appreciation ahead of you, right? Just like I really believe we're going to have. The market turned, and it took 2 years to start to see negative, a year and a half to start seeing negative appreciation. And it didn't happen overnight. That takes time. So I want to ride this like 20% appreciation train. This sounds awesome. So we're buying properties. Now, would it have been better to buy a year ago, 2 years ago, 50 years ago? Of course it would, but we didn't. Here we are. And I don't want to miss out. So we purchased a property, and I'm excited to watch that appreciation ratchet up the value for the coming years. Now, what we don't think is going to happen is that we're going to see the line go negative. That's the other reason I bought a property. I don't think we're going negative at all. I think we'll taper out at around 150 for a little while until interest rates climb enough and supply enters the market enough for us to get to like the 100 range. That's probably a couple of years out, in my opinion. We don't have all the craziness we had in 2005 that caused all the financial meltdown. So I think we're going to see a much more normal leveling off here that's going to happen. So I'm excited to ride this out. So that means if you're a home buyer and you can endure the fight, like you want to get out there and get a deal done, stay in the fight. Don't quit. There are deals still to be had, meaning properties you can buy that are going to appreciate in the coming future. If you're a home seller and you don't have a good reason to sell, hang on. I think you still got plenty of appreciation left to kind of ride out, right? Like don't worry about it. If you're looking to buy up, purchase a new property that's bigger, I would do that sooner than later because you want to take the appreciation of the new, bigger asset as opposed to your old, smaller one. So sell now, buy now. I think that's the way to do that. So hope that helps as you're planning, thinking through what's going on. If you're really concerned about a bubble, I have a specific post on our blog about why I don't think there's a bubble where I go into all those specifics. You can check that out as well. In the meantime, if you have any questions or you're interested in buying or selling property, please let us know. We'd be happy to help. Thanks so much. Have a great day.